Alright, so yo guys, welcome back to my channel. This is Trade Shield. This is an update on my phase 2 challenge account. I'm just gonna let you know a little bit about what's going on this week on my phase 2. So I've taken roughly 4 trades, or ignore this one, I've taken 3 trades I should say. Two of the trades have been 1% losses. I'm currently in running profit for one of them at the moment. I'm risking 1% on all of the trades, and my max drawdown for the account is going to be 8%, so I'm down 2%. I've got 6% remaining, and I've got running profit on the current trade. Let's talk about the 3 trades that I've taken. The first 2 trades were losses. I'll talk to you about the first trade that I took. The first trade that I took was this one here. So we're in the range. We've regained the range, and if you're unaware, price is trading in the range at the discount part of the range. So the trade was an attempt to buy price back into the premium zone. So what I looked to do in order to enter the market was I tried to buy the market after a sweep of the Asian session lows, and this is because price is trading in an uptrend. So the most optimal area of entry would be after a sweep of liquidity, which is right here, and that's how we got positioned into this market. This market went up to roughly around 1% profit before crashing down and rejecting off this fair value gap. And then following this loss, I made a mistake, and it's interesting to understand that you can still make mistakes in trading even though you're profitable. So what I did was I entered an impulsive trade. As soon as I got stopped out, I wanted to position short, and I'll talk about that a little bit later on in this video on why I've looked for short entries. But I looked to get short here. After looking to get short, without looking to position at an optimal area, price bounced, swept me out as price usually does when you fail to position effectively. Price will usually take you out before continuing down. So that's what price done. It swept me out, took me out, and then after price took me out, I was able to get a much better position into the trade. So that's what I've done now, and now I'm currently in running profit of nearly 1%. So let's talk about why I'm getting short into this market. So as I spoke to you guys a second ago, and I've mentioned to you guys that I was looking to buy the market into the premium part of the range, which is here. So this is above this is the 50% zone of the range. Above the 50% zone is the premium part of the range. I was initially targeting that level. But what happened was we got a rejection of this fair value gap. And this rejection of this fair value gap tells me that, so this becomes an inverted fair value gap. When price, rallies higher and leaves a fair value gap down here, and then price then comes all the way down, breaches the fair value gap and closes below it, a retest of that fair value gap becomes an inversion. This is sort of the idea that, support becomes resistance, or resistance becomes future support. It's sort of the idea that once you break below a level, price will attempt to retest that level before continuing in the direction of the trend. So because I took a trade earlier in the week on Tuesday, I believe it was, no, on Wednesday it seems like, because I took this trade here and I was taken out, so we had a rejection of this fair value gap. This indicates to me that now this level in particular has confirmed an inversion. So following that, that's why I took the impulsive trade, thinking maybe price will just continue lower. I was obviously wrong to do that, and I paid for that with a 1% loss. But this second trade that I'm in, I'm relatively confident that we can see further downwards movement. I actually want to talk a little bit about what I'm expecting to happen over the next week or so. So this rejection and this inversion of this fair value gap supports this decline to at least retest the lows of the market. So what I'm looking to see is whether or not price continues down in a very, very aggressive manner, and it seems like we're setting up for that. The main thing is we don't have any hurdles inside. All we've got is lows on the chart. We've got a level of support here, followed by liquidity resting here, and the rest is just further liquidity. So we could actually see a major crash in the markets over the next few weeks. It's interesting to see how the charts are set up at the moment. But one thing I want to say is getting into short positions are extremely difficult. I'll show you what this short traders look like today. So you can see I got into the short up here. I managed to position during New York session, and after positioning into the market, you can see how many times we've spiked all the way up into the market. We've had a spike here, we've had a spike one, we've had another one here, and you can just imagine what it's like day trading this market, trying to look for short entries and just being wicked out and spiked out. If not for my confidence in the trade, other people probably would have exited the position just to secure some profits. But that being said, there's no guarantees of anything in the markets, so you always want to manage your risk and ensure that you're trading in a sustainable way. that being said, I'll leave this for now. I'll give you guys an update on this trade over the next couple of days. I'll actually be back tomorrow to review and analyze the market further. So, alright, yo guys, I'm back with an update for this market. For this video, I was talking to you guys earlier about our trade following the rejection of this inverted fair value gap, and we had a perfect trade. Obviously, I made the mistake of taking a trade up. Take a trade here instead of waiting for an optimal trade close to the fair value gap, but that's fine. We recovered from that on this trade, and I was able to make a 3R profit, as can be seen here. So I took two losses initially, this one, and then the impulsive trade was that one, but I managed to take a 3R trade and close that out. Ideally, I would have wanted to hold the market further. With a 3R trade, I wanted to hold the market further down to our targets, which is liquidity resting here and potentially these lows. However, this account was in drawdown because of the two losses I took, so I prefer to just try and get out of drawdown, and not trade within drawdown. So that's why I closed out the trades the way I did. Mainly because when you trade in a drawdown, you tend to trade emotionally for one, and you have to try and claw your way out of drawdown before you can start making profit again. So ideally, I just wanted to get out of drawdown, so I know in my next trade that I take, the trade is going to be firstly risking my profits. If I risk 1%, it's going to be risking my profits, and two, I'm not going to be risking going into drawdown, going deeper into drawdown, I should say. So that's why I closed out the trade quite early. But as they say, you never go broke taking a profit. So I'm happy with this trade. I took my 3R trade, and I'm happy with the account now. So I'm probably gonna call it quits for now. I'll be back next week with another video. But I just really want to quickly talk about the importance of psychology when it comes to trading these funded accounts. The worst thing you want to do when you're trading these funded accounts is go deep into drawdown. You want to avoid drawdown as much as possible. Once you're in drawdown, you have less risk to play with, and the idea of having less risk will probably make you a lot worse in regards to following your rules and trading an effective way. But yeah, my targets were obviously further down, was at least here, at least sweeping this liquidity here, but then further targeting the lows, which is just a simple trade, would have been down, bounce off a fair value gap, continue down and target the lows again, and then we watch to see what happens at these lows, whether to see if price is able to continue lower, or there's another option of price sweeping liquidity, trading back into the range, and then we rally back to all-time highs. So there's multiple options of what could happen once we target these lows. But as I mentioned already, I was already in drawdown, so I prefer to get out of drawdown before being a bit more aggressive with my trading. And nevertheless, I've got 3% left before I get funded on my first 100k. We're funded next in this trading journey on this channel. So the idea is to show you guys how easy it is when you swing trade to get yourself funded in a sustainable way. And I just want to say, if you guys see value in this content, definitely hit the subscribe button. I will continue to be posting videos similar to this on this channel. But yeah, I hope you enjoyed it. My name's Take Note. I'll catch you in the next video.